Good afternoon, everyone. My name is Tanya Titman, and I will be taking you through this webinar this afternoon, which is on cash flow survival strategies. Thank you very much for joining us today. If you were unable to join us, or people that were planning on attending and weren't able to get along, we will be taking a recording of today's session and distributing that afterwards. So if you do have any questions as we go through, I would love for you to put those questions into the chat, and you can send those through. I'm happy to take questions as we go and to make this as interactive for you as possible. I'd really like to make sure that you get what you need out of the workshop today. So feel free to send your questions through, and I'll answer those as we go through the webinar. So let's get started. We're talking about cash flow. It's certainly the topic of the day, and many businesses and organisations are really focusing on this at the moment to try and get some certainty, I suppose, about what the future looks like. As difficult as that is, there are ways in which you can do that, and I'm going to take you through some pieces of advice, some tips, some tricks in terms of cash flow planning, and show you what a weekly cash flow forecast needs to look like in order for you to manage it proactively and with a level of accuracy in there. So let's get started. Firstly, just a quick bit of information about who I am. My name is Tanya Titman, so I am the National Lead for BDO in Australia for financial education. My other role that I have in BDO is as Head of Strategic Innovation. So one of the things that I find at the moment is really, amongst all of this crisis that we're moving through, the exciting part of it is the innovation that's happening out there in business. So happy to dive into that area a little bit, and we will do so a little bit further in the webinar, but innovation is very much my passion, and just helping businesses to evolve and to navigate through this period of time is something that is certainly starting to become much more of a topic of conversation. So let's move into what we're going to cover today. We're going to look at a new world cash flow forecast. So cash flow forecasting is really quite different today than what it used to be. For many businesses, for many organisations, cash flow forecasting was an afterthought. A lot of people are managing their business by the bank account. They may have been doing a monthly cash flow forecast if they're lucky, but most people were really not across this cash flow forecasting piece. So it's why we've been running a number of webinars and providing tools to businesses to help them navigate this, because it is such a critical element. It also has an ability to reduce an enormous amount of financial stress for businesses when you can get that clarity and you get the data and you start making decisions in terms of the data that's in front of you instead of the emotion. Then you make much better decisions. So this is really a key piece of financial information that you need, and you need to have clarity around in order to navigate this territory that we're in at the moment. We're going to talk through a number of different strategies that you can use. So once you've got that clarity of a good, solid cash flow forecast, there is a whole lot of things that you can do to extend your cash flow. So we're going to go through those in some detail. There's a number of them there. We call them cash flow levers, from pricing, volume, accounts receivable, assets, expenses, inventory, and staffing. So we're going to explore some of the options that are available there and look at how you can stretch your cash flow further. So getting quite strategic about cash flow forecasting is really where businesses need to evolve to. We're also going to look to the future and a little bit around that innovation piece, and give you some next steps in terms of how we can help you to get that cash flow forecasting process in place, build it for your business, embed it as a business process, because whilst a lot of people are jumping onto this now, it always has been an important part of financial management, and getting a tool that makes sense to you, that is part of the business operations, and a weekly process is really actually just good business sense. So let's have a look at what a New World cash flow forecast looks like, and why is it different, I suppose, to what you may have been doing in the past. And as I said, cash flow forecasting was something that I suppose was done, but not by many businesses, often on a monthly basis. And it certainly didn't have that granular element where people were actively looking at it. It was often considered something that their advisor would do for them, often a three-way cash flow forecast, which is looking at it from the elements of cash flow, profit and loss, and balance sheet forecasting. That would be done if someone was looking to get some funding. So it was something that an advisor would do up for a bank. But what we're moving towards now, and what we're really passionate about, is ensuring that businesses have the right tools to be able to be empowered to drive the cash flow strategy and know the levers that they can pull, so that they can actually influence and extend cash flow. So this is really a key piece at this point in time, and I'm very much of the opinion that everyone has to have something in place that they can manage it. It just reduces stress. It creates clarity around, how much cash flow you have left, how far it's going to get you, and what are the levers you can pull to extend it. A cash flow is really where you should be getting to, is being able to predict the next 12 weeks fairly accurately, and that can be done even in this uncertain time. Being able to predict cash flow with the best information that you have available now and updating it on a weekly basis, so that you're looking out for 12 weeks, is really critical. The cash flow forecast tools that we work with actually predict the next 12 months. So the reality is, as we get closer and closer, as the weeks go on, we're continually updating. So you essentially get left with a plan which is quite an accurate 12-month cash flow model, and it just becomes a piece of the business that you're updating on a weekly basis. You don't need to be an accountant to run an accurate cash flow forecast. It does help if you've got people there that can support you in terms of a bookkeeper, an internal accountant, then great, but it actually doesn't need that. And I've taught many business owners how to put these tools in place and given them tools to use, and they're using those very effectively and have been embedded in their business for several years. So it is possible. The structure of a cash flow forecast, and it gets very confusing for people in terms of profit versus cash flow. They're two very different things. What we're looking at in a cash flow forecast is actually trying to model and predict the cash inflows and cash outflows through the business. So we're starting with the opening balance, and the first part is deciding what bank accounts you want to include in your cash flow. Now, you don't have to include every bank account. You could actually choose to leave some out, so you're operating lean, and you want to keep, say, a savings account out of the picture, because you want to actually just keep that to the side and see if the business can sustain itself just on the trading cash flows. So that's the way some people look at it. Other people want to bring all of the accounts in, but it's about customizing it and making it really relevant, and making sure that it makes sense for you. The cash flowing into the business comes in a couple of different ways. So typically you'll have cash flowing in which is of a recurring nature. So it might come in on a certain date. It might be membership fees. You might have money coming in on a certain day of the month or a certain day of the week. And they come in on a recurring basis. Now, they may change and be different as we go forward with the impact of what's happening, but they're kind of a set date that we can predict them. We also have cash flowing in which can be of a variable nature. And so with the variable cash inflows, we have less control over them. So we might send an invoice to someone and they've got to pay on account, and it's up to them when they pay. So we have less control. And just by simply breaking up these elements in a cash flow, it helps us to understand the things that we can influence and the things that we can't influence. And that's very much around these levers that we create in a cash flow tool. When the cash is flowing out of the business, again, it has that same element. Some things are going to go out automatically. So they're on a direct debit, they're going to come out of your bank account or be charged to a credit card on a certain date of the month, or it could be even of the week. And so those things you have less ability to influence unless you cancel them or you defer some payments. When we're looking at cash flowing out, which are the bills that we pay, so we receive an invoice and we pay the bills, then those things we have control over. So again, it's another lever because we choose when we pay those bills. And you have the ability to negotiate with suppliers, to do payment plans, and those things, sometimes just by moving cash flow or payments going out by 1 week can actually turn a whole cash flow around. And that timing and having that sort of visibility over your cash flow is extremely powerful. So having tools at hand that can do that is really critical. And this is an example. So there's many tools in cash flow that you can kind of tap into your accounting software, and they automatically do everything for you. I find at the end of the day, it's much better to have an approach which you can actually model and use and interact with. So we take the approach of sort of building these tools in spreadsheet type formats, and this gives you complete control to be able to change, to do reforecasting, and it stops some of the cash flow tools that you plug into your accounting software. What we find is they try to be a little bit too predictive, and you lose a bit of control about managing the what if type scenarios or to move payments around. So you can see here on screen, we have this is the overall piece. So this is the culmination of a whole lot of different pieces, from cash coming in, cash going out, tax and super. We've also built in some calculators here to help navigate and understand the timing around PAYG Cash Boost and also JobKeeper. Those two elements are, make it really, really difficult to understand and to see what cash flow looks like. And all of those elements are built into this final piece, which gives you the clarity to look at a closing balance and say, well, what is our cash flow position going out for the next 12 weeks? Is it positive or negative? If it's red, it means that we're predicting we don't have sufficient cash. If it's green, it's predicting that we do have sufficient cash. We can then go back and change things around, move certain payments and see what's the impact. Can we stretch the cash flow with the overall goal of making this bottom line green all the way along? So that's an example of, cash flow on a weekly basis, what it would look like, and the power of actually pulling those levers and getting the clarity around understanding how you can move your cash flow around. So I'm just going to go into some of the strategies around cash flow. So when you're looking at different strategies, you firstly need to have the data. So you need to have that cash flow forecast piece in place. When you have that, then you have the ability to actually move some of those pieces around through some cash flow strategy. And we categorize them in terms of increasing cash coming in and reducing cash going out. So in terms of looking at how we can increase cash coming in, it comes into two key pieces: price and volume, plus accounts receivable. And then when we're looking at cash going out or trying to reduce cash going out, we're looking at utilization of assets. We're looking at our staffing resources. We look at inventory, and we also look at expenses. So one of the first group in cash in, they're going to actually be strategies to increase money coming in. And the second group are ways which we can decrease the money going out. So it's just a simple way to kind of build those into two buckets for you. I'm going to go into each of these in a little bit more detail. So the first one is a really obvious one, and I'm sure this is something that everyone has been scrutinizing and going through, but it's looking at your expenses lever. So where can you cut costs and stretch your cash further? So when we're looking at expenses, this is really about reviewing your profit and loss and your cash flow regularly. So understanding the money that is going out. And many people, when we actually sit down in our workshops and go through this, it's often the first time that they realize, the elements of what money is flowing out. And there's often a lot of discretionary spending. So these are the areas in a business which are the nice to have. And when times are great, businesses like to spend money on things such as gifts and parties and all sorts of nice things to have. But ultimately, when times get tough, they're the things that you need to cut back on first. So putting them in a category called discretionary spending is often quite eye-opening for many people, but it really helps to just narrow in on where the key areas to first cut back on are. Looking for the 1% changes in overheads. So it's really important. Sometimes if you actually, if you don't go through with the thought process, if you're looking for the huge, the big pieces, just look for the 1% changes. If you can take a 1% reduction over a number of different line items, that can have quite an overall impact. And so, that's really important to consider. Sometimes it's just these small things, looking at refining expenses and finding those cost savings in an accumulative basis over time is actually really quite an effective way to reduce expenses. And looking at renegotiating any of the recurring expenses. So looking at the things that are coming out on an automatic basis and what can you do. So going through your profit and loss, it's also it's important to structure your expenses when you're looking at a profit and loss, so you can see these things easily. I see many examples of profit and loss statements where the expenses are often structured in alphabetical order. They start from A and they go to Z, and there's no logic to the grouping of the expenses. When you start grouping things, you can get a much clearer picture, and it just helps to narrow in the categories of expenses and the areas in which you might be able to cut back. So there's some examples here. Now, if I was looking through this particular list of expenses here, one of the things that I would recommend you do, so these are all line items, you can go through and say, yeah, we can't cut back on any of those, but it's actually when you go and look beyond the actual line item here and look to the transactions that are behind it. So one of the great ones that I find a lot of savings in is often in the subscriptions. So you'll find that in subscriptions, you have a lot of software expenses, potentially things that you might have signed up to, you might have been trying, you haven't used for a while, but just continually looking at all of those things. And subscriptions are often the ones that can get away from you because they kind of recur. Sometimes they're not that much of an expense. There might be quite a small amount, and they'll creep up on you. So add a few of those together and you can get some good savings. So just scrutinize everything, work out what is non-critical and cut it back. And this is actually just good business sense. So, whilst we're forced into this situation, it's actually a really good process to go through to start reviewing and really, querying, questioning all of these expenses and whether you actually need them for your business operations. Is there any expenses in there that might be able to be deferred? Can we adjust any of them? Can we pause on them for a period of time? Can we renegotiate any of those arrangements? There's plenty that can be done. So you should be able to get quite a bit of savings around your expenses. And if it is just putting things on pause for a period of time, the deferrals is certainly something that you can do. The issue with deferrals is you potentially create a bigger problem at the other end because they're just going to mount up, and at some point in time they need to be repaid. So any deferral opportunities that you take up is really creating a liability for the business. So you're creating an obligation to pay at some point in the future, and that's probably the last step I would take. So if possible, avoid those deferral opportunities if there's other things, so that exhaust all the other opportunities first. The next thing we'll look at is the pricing lever. So when you're looking at your cash flow strategy, there's plenty that can often be done around pricing, around looking at your sources of revenues. And in order to do this, it's about getting clarity around what they are. So often I will work with businesses to restructure their profit and loss statement so that we're getting real clarity around what the income streams are. So you're getting income streams through membership, there might be some product sales, there might be lessons. So breaking up all of those categories into separate line items, so you can analyze them and work out your price volume sort of mechanics, and then start analyzing and looking into that data to see what would happen if we were to make a slight change to price on these particular revenue lines. So looking at the value as well that you're delivering. So if there's nothing at this point in time, it's a difficult time to certainly be doing anything with pricing, but looking at the value that potentially you're delivering to members and how you can deliver that value to maintain some of that revenue through the period is also a key strategy. So there's a lot of businesses which are evolving and adapting, and it's really pleasing to see the innovation and I suppose what's coming out, in terms of how people are adapting, how people are evolving and making the most of this time. And I think the greatest opportunity is then when you're forced to adapt, what happens then at the other end? Like, have you actually created an additional revenue stream that otherwise you would never have had? And I think many businesses are in that category. So I challenge you to sort of really think about these particular areas. We have some pricing lever cards, which is a resource which questions a whole lot of, puts a whole lot of questions around each of these levers that you can challenge and use with your teams to actually challenge the business model a little bit and think of, are there some opportunities here that we've missed or overlooked? So there's some really great resources that we take people through in our workshops. The next one that we're going to go through is our volume lever, and this is really about how can you increase sales volume. So, looking at membership numbers, looking at products and services. Is there an opportunity to sell into new markets? Is there, is there the ability to sell into different channels? So whilst people have been in isolation and it's probably been difficult to maintain a sense of normality within your particular businesses, then what are the other opportunities? Because you've got plenty of members out there who potentially would still want to keep up their activity and want to still stay connected. So how can you continue to engage with them and provide ways of delivering value so you can maintain the volume of membership instead of have it decrease over time? So certainly there's opportunities in each of these, and it's just a matter of challenging and questioning the business model a little bit to find, is there some ways that we could create new revenue streams here? A big one is around accounts receivable. So if you do have accounts receivable and so people owe you money, this is certainly one that people are putting a lot of effort into in terms of tightening up the process, making sure that they're connecting with their customers as regularly as possible. One of the things to consider is, whilst there is a lot of stimulus out there supporting people, most of that stimulus package starts drying up around September. So you might find that there may have been an initial period of time where accounts receivable might have been looking a little bit like they were dragging out, might have come good at the moment, but beware that we're heading into a period of time in the future where a lot of the stimulus will dry up, and that could put extra pressure on your accounts receivable. So you want to keep the process around that very tight. You want to make sure that you're following up and you're working with people to collect any money that's owed to you on a regular basis. You might need to consider some early payment discounts, or you might need to consider some payment plans to help people to be able to repay in full the amounts that are due. But this is an area that we're finding a lot of people are needing to put extra resources into to tighten up. And it's a good process to go through to just review what is your accounts receivable process, and can you actually tighten it up and ensure that you don't end up with a lot of bad debts at the end of the day that you didn't initially anticipate. Looking at the next one being the assets lever, and so when we're looking at assets, we're looking at any underutilized or unnecessary assets that potentially could be put to better use. So looking at your balance sheet and understanding what assets you have on the balance sheet. Now I'm sure that there are many assets that you have. What are the initiatives that you've done to either repurpose those, to rent them out, to sell them, or to consider refinancing? I think this is one that has a lot of opportunity, and certainly I would be surprised if many of you had not already gone down this path to consider some of these options, because particularly in sporting organisations, I'm seeing a lot of activity in this particular lever where they're renting out some of their equipment to members, so that at least they're maintaining a revenue stream through that period. And it also allows people to engage and sort of stay connected throughout the period where they've been forced into a shutdown situation. So assets are certainly something that I think you can do quite a bit with. And I think for many sporting organisations, it's almost opened up a new revenue stream to them that they would never have anticipated previously. So they're now collecting rent and additional fees on equipment that has not been fully utilised or hasn't been able to be utilised because of a shutdown situation. And I think they're considering, well, when business does go back to normal, do they actually keep that revenue stream in place? Because that now sort of fits the purpose for some people who would prefer to operate in a different way as a result of what they've gone through now. So that's a really interesting one to consider. Inventory is another one. So you would be holding a degree of inventory, and so that holding of that inventory has a element of an impact on cash flow. The quicker that you turn your inventory or your stock to cash, the faster that your cash flow will turn, and that's a really important thing to understand. So you can calculate on average how many days you're holding inventory. It's certainly an indicator that we use a lot to track whether someone's heading into a cash flow crisis. If we see that your inventory days are starting to stretch out, it's an indicator to us that that actually your cash flow is going to be heading into some level of crisis. So inventory is a key piece, and looking at what you're doing to reduce your stock holdings, what you're doing to actually improve the terms of how you're buying inventory, moving inventory that might be getting old, is slow moving or obsolete, and that might be at a discount, but it's better to get some money for it rather than having it sitting there and not earning money. And just looking at the way in which you're ordering inventory and how much inventory you're holding at any one point in time. So managing that inventory one has a huge impact on your cash flow. So certainly, look at that as an opportunity, both now in terms of what you do to move it, but also going forward into the future. It's a key piece of your cash flow management. In terms of your staffing lever, then it is really about looking at your staffing. How many staff do you retain? JobKeeper has really helped with this and has been a huge boost for many businesses to be able to retain key people. Although, the whole cash flow side of things and understanding the timing of JobKeeper subsidies, I hope most of you are now in that sort of stream of getting your cash flow, your JobKeeper subsidies through. The timing of it is critical, and the reporting deadlines are critical on that to keep your cash flow coming through on a regular basis. So as part of that, it's really about understanding who your key people are and retaining your key people through this period. One of the worst things you can do is make rash decisions around reducing staff or getting rid of staff, standing them down or terminating them, because you need those staff to operate when things start getting back to normal. So it is an important element to retain people in the business, and that's very much why a lot of the stimulus has been designed around that, is to keep businesses moving so that they are in a position to, to be able to open up and get back to some sense of normality in the future. So they're all the levers that I'm going to go through. I just want to talk through a few other, I suppose, strategies that you need to consider in terms of your cash flow. And I've touched on this one a little bit when we talked about expenses, but just the concept of standstill agreements. And this is really around negotiating with your suppliers. And these are typically major suppliers in terms of landlords or statutory creditors, banks and ATO. So negotiating some payment holidays where you're going to put a pause on your payments. Now, the important thing to understand is this doesn't negate the payments. It actually will just pause them, and they will accrue, or they will build up as a liability at some point down the track. So this is a good opportunity to extend your cash flow, but you've got to be extremely careful with standstill agreements in terms of ensuring you understand the liability that you're creating, and you need to have a plan to be able to pay that off at the other end. So be careful with these, but in terms of going into the negotiations, it is a great way to sort of be upfront, be proactive, have the conversation, be open about it. There's a lot of these conversations happening and have been happening for some time, and people are all working together quite well to assist each other to get through. If you're having challenges with having those arrangements or conversations, then it's certainly, first round is kind of the first attempt, but, coming back and revisiting it when more information comes to light is often what's needed. So just don't give up at the first point of no. It might be a matter of coming back with some further information. And for most people that are coming into these arrangements with their with the organisations, with businesses, they want to see a clear cash flow forecast. So it is important to be able to surface the facts and not just have a conversation. You need to show them and to be clear and upfront with the data, which is your financial information, and show that you've got a cash flow forecast that with some prediction, with some accuracy, that will allow you to commit to a future date when you can recommence payment of those arrangements. Also, other sources of capital. So there are certainly some debt opportunities there in terms of the stimulus packages. If you are clear on what your funding gaps are or how much funding you may need, then it's much easier to have the conversation. So again, going into any of these conversations, you need to be clear in terms of what your cash flow forecast position is, and you need to be in control of it. So whilst it's great to talk to your accountant or your advisor and get them to do it for you, that's kind of a point in time piece, and you need to have the tools to be able to manage it yourself and to be responsible for it yourself. At the end of the day, cash flow is your responsibility. An advisor can put something together to send to the bank, and that's great. And that's my background is as an accountant. I've spent many years working with businesses, and happy to do a cash flow forecast. But my position is that really doesn't help you to understand it. And at the end of the day, I'm not there managing your cash flow day in, day out. You're the person that needs to do that. The other thing is just to understand the support options that are available to you, and there's many of those. So there's stimulus and support packages. There's lots of information out there now. The two key ones that came through were the PAYG Cash Boost and the JobKeeper subsidy. Does your business qualify? Do your staff qualify? That landscape is very, very complex. Hopefully that you've all had a look at that and been able to navigate it and get some advice around that application, and submit your applications to be qualified for that. But it is quite a complex piece. If you don't qualify under the normal requirements, then there are some alternative requirements where you can get access to JobKeeper as well. and just understanding all of the long-term impact. So plenty of information out there in terms of stimulus and support package. Understand each state is a little bit different. We have both federal stimulus and we have state-based stimulus, but there is a lot out there, and I would really encourage you. Some of them are automatic, so you'll get automatic access to some of the stimulus. Others have to be on application, but it's across so many different things. So please have a look at your local guidelines. We have a lot of information around each state. With BDO being a national practice, we do have information right across the country on what the stimulus looks like. And we've got a great resource on our website that I'd encourage you to look at. It's a COVID-19 page which will take you through all of the stimulus options and just some free resources, webinar recordings, and a lot of information to help you through this period. So a few things to remember in terms of your cash flow. One of them is around understanding that cash flow is one piece of the puzzle. So cash flow is really important, and forecasting cash flow is a really critical piece at the moment, but it's only one part of understanding the financial position of the business. You also have a profit and loss, and you have a balance sheet, and those three elements all work together. So you need to understand the profit and loss position. So that's kind of the commercial viability of the business. The balance sheet looks at the liquidity of the business. It looks at your assets and your liabilities and understanding your obligations there, and can you pay all of those liabilities based on the assets that you hold. The cash flow is how cash is moving in and out of the business. So those three pieces all work together and are all critical, and any one in isolation will give you a false view of your financial position. So whilst cash flow is a really critical piece, and it's probably the most important piece for most businesses at the moment to understand how far is their cash flow going to take them, when is it going to run out. You don't want to be getting to a situation where you find out overnight that you don't have enough money there to sustain you. You want to know with several weeks in advance, because there's plenty, as we've gone through today, that you can do to extend that cash flow. So when you're looking at your financial statements, please keep that in mind, that there are those three elements to it. The next piece is to always keep assessing your plan. So as information is coming to light, and it's coming to light on a regular basis at the moment, daily, if not daily, it's weekly, things are changing. So continually having these pieces updated, reforecasting, bringing the latest information into your plan and looking forward is really critical at this point in time. So you need these active pieces at work where you can sort of continually look at them, move the pieces around, reforecast, do some what if scenarios, but sort of see what it's looking like going forward, and use that data to make the strategic decisions. I'm a really big fan of data-based decisions, and I think unfortunately at the moment, because there's so much emotion in what's happened and it's hit everyone so quickly, there's a lot of emotional decisions that were getting made, certainly in the early days. I'd really encourage you to always make sure that you have the data and the financial data in place to make the right decisions. And cash flow is one of those pieces that is really part of that data-based decision making. And try to avoid collecting liabilities. So whilst the deferral mechanisms are great, they will give you some short-term relief, they're actually going to potentially give you some long-term pain. So be aware of that, and make sure that the liabilities that you're collecting along the way, that you're aware that they are liabilities, you record them as such. It's not actually wiping expenses off your financial statements. It's actually accruing liabilities where you're taking up deferral mechanisms, which might be offered by the bank or by the ATO, or by tenants, landlords, or various pieces. So just be aware of that. Try to avoid collecting liabilities as much as possible. That's a last resort, as it should be. Take all the other options first. And just touching on, there was some announcement there around company directors and obligations in terms of a 6-month moratorium for insolvent trading. It's just important to understand, if you are a director of a company, that particular 6-month legislation or moratorium on insolvent trading doesn't extend to other director obligations. So it's still important that you keep your financial records up to date. You still have your fiduciary duties, which is acting in good faith, due care and diligence, and acting for a proper purpose. And there is also the insolvent trading piece. So one of the pieces here is just trying to give you some breathing space. So if you do have liabilities mounting, it is important to understand that that covers the 6-month sort of guidelines there are around giving you some peace of mind around insolvent trading, but it's not around the other two. You still need to maintain your duties and keep your financial records up to date, keep all your lodgements up to date. The worst thing you can do is sort of bury your head in the sand and not lodge critical documents like your BAS, or not keep up to date with things such as superannuation or any of your ASIC obligations. So keep that in mind, but it is good. It is certainly helpful that you have that. It's giving people, I suppose, a little bit more comfort that if their liabilities are mounting and they're in a situation where their assets are not sufficient to be able to repay their liabilities, which is a technically insolvent position, then you do have some breathing space there for this period to sort of pass and to get back to a position where your assets are in a stronger position. I haven't had any questions so far, but I'm taking it that this is all making sense. Please feel free to ask me any questions as we go. One of the things to just be aware of, there are options available to you in terms of ensuring that your business remains viable, ensuring it remains stable and operational. Be proactive. There is a lot of goodwill out there, and people are really working together to support each other. We're seeing a lot of cooperation amongst businesses. Everyone is in this unusual situation. We're all in the same boat, and being worldwide in the same boat is quite an incredible situation to be in. If you have had those sort of initial conversations and didn't get too far in terms of negotiating some standstill arrangements or negotiating with financiers, then go back and try round 2, but do it with the right information. So we're finding that people that do present some good information, that do have the data, rather than just coming with the emotion, are certainly in a better place to be able to have those negotiations and to give people some, I suppose, some sense of comfort that you will be able to repay at some point in the future. So I think people are willing to work with you if you have the information to be able to do that. And then there's the whole hibernation versus the administration side of things. So many businesses are in a state of hibernation, questioning whether they're going to make it through and what it's going to look like. There certainly are steps in terms of moving towards an administration process to help through this period, but we're finding most businesses certainly are starting to come out or to see some light at the end of the tunnel. Some relaxing of the restrictions at the moment are certainly helping with that. So for most people, it has been a period of hibernation. They're starting to come out of that. They're starting to look towards the future. And the exciting piece is probably the last point there, which is the business model innovation. I'm seeing plenty of businesses, and certainly in the sporting space, which have been able to move their business model to something that's online, to delivering in a way or through a channel that was not previously available, to stay in contact with their members. And I think it's quite interesting to see what will happen, because I think there's a degree of people out there and their members that will want to continue to operate in that way. So to think that out of this crisis they could come out the other side with with double the income, when the business goes back to normal and they can maintain a new channel of income on top of that. I think that's a really exciting opportunity for many businesses at the moment. So I'd really challenge you to consider what that looks like for your particular organisation. Is there some opportunities there that certainly you could still capture, have some conversations, challenge the way you do business, because there's plenty of disruption out there. Now's the time to make change. People are very willing and open to new things at the moment, which is really exciting. Certainly in my role in innovation with BDO, I think the speed at which now we're moving projects that potentially would have taken years to achieve in the past is really quite an exciting opportunity. So my days are pretty full at the moment. So next steps, I just wanted to outline a couple of ways. If you don't have a cash flow tool in place, we're really passionate about this, and we're trying to create pathways and ways for people to access these models. So there's two ways that you can do it. Firstly, we have an online course. So our online course, essentially you get to have the cash flow tool that we've built. You can use that forever and a day. It becomes your tool in your business, and we take you through the steps, and it's it's a self-paced piece, so you can do that at your leisure. But we take you through, and it's myself guiding you through that process to build each of those tabs out so that you have a fully custom built cash flow tool on a weekly basis, incorporating the PAYD Boost and the JobKeeper calculator. And that you can use forever and a day within the business. So that's in an online course, and you can enroll at any time. The link is there, and we'll also send that to you post this workshop. The other one is that we do some virtual workshops. So if you don't want to do it, you're not someone who wants to do self-paced, but you still want a tool in place, then we have virtual workshops where we bring our advisors in and we help you to build these cash flow forecasts in that session. We allow a number of hours to do it, but some people get through it really quickly. So there's certainly plenty of opportunities there to do it. And I'll show you a little bit about what it is that we build so that you can get an idea around it. Oops. So in terms of the cash flow tool, what you have is a number of tabs at the bottom, and it takes you through piece by piece, and we build this out over the course of both the online program and the workshop. The cash boost calculators are built in, so it automatically calculates the timing and puts it into the relevant week in the cash flow. And the JobKeeper subsidy is the same. So if you've been able to qualify for JobKeeper, this brings in the timing into the cash flow forecast. And once we build through each of these tabs, and there's plenty more that I haven't shown you here today, but it brings you into this overall cash flow forecast. So it just gives you a tool that you embed in your business. It becomes yours to use. It's fully customizable, and we support you in terms of helping you build that out so that it's relevant for your particular situation. Now, I just have a question come through here. So we've got a volunteer-run club, no staff, use contractors for greens, maintenance and other specific tasks. Are there any stimulus programs available to provide assistance to clubs not employing staff around a loss? So look, it is there is a lot of stimulus out there in terms of what's specific there for you. What I would encourage you to do, I will provide my details here on the final slide. Happy for you to send me through that question. We have a lot of resources on our website. It will depend on what state you're located in. And if you would like to send me through an email, we'll make sure that you get some information provided to you to give you an extensive list of all of the stimulus that's available. I think one of the most challenging things for many organisations at the moment is there is so much information out there. It's all over the place, and trying to find it all in, in one place that you can have access to kind of go through a checklist of what do I qualify for, is very difficult. So I'm more than happy to guide you and connect you with some information there that would assist. And depending on what state you're in, we can also connect you with one of our officers, and they can give you some more specific state-based advice. So hopefully, if there's any more questions, I'm happy to take some now. But otherwise, we do have our workshops coming up. We do have that online course that is available. If you don't have a cash flow in place, I'd really encourage you to do it. We fully support all of the businesses that come through and help them to build this, and we take such a I guess, a personal interest in making sure you have the right tools and the right process embedded to give you some clarity around your cash flow forecast. It is such a critical piece at the moment, and I'd really encourage you to make sure that you have something in place. If you don't already, please, use the opportunity to get something in place and build it out so that it will enable you to make the right decisions in your business, and also it will also enable you to have some good discussions and conversations with potentially suppliers if you're needing to extend your cash flow or do some of those standstill type arrangements. So on that note, please feel free to reach out if there's anything that I can do to assist you. But thank you very much for joining me today. I hope that has been helpful for you. And if you do have any questions, then please let us know. Please have a look at our website resources. There is an enormous amount of information there to guide you through the COVID-19 crisis. And if you would like to attend one of our cash flow workshops, we'll send you some information to help you register for those. We've got those coming up shortly, as well as the online program. So thank you again, everyone, and all the best.